Welcome to our deep dive, everybody.
Oh.
This time we're taking a deep dive into the world of trading. Specifically, we're going to be talking about the laws that govern this world.
Yeah.
As laid out in Agustin Lebron's The Laws of Trading.
It's a good one.
It is a good one.
A really good one.
Now, you might be thinking,
Yeah.
I'm not a trader. Why should I care about this?
Yeah.
But even if you've never bought a stock in your life,
Right.
these laws that LeBron lays out offer some really amazing insights
Yeah.
into decision-making that you can use in everyday life,
That's right.
whether you're negotiating a car purchase or even choosing a career path.
That's what's so compelling about LeBron's approach. He takes these seemingly complex trading concepts and makes them so relatable, using real-world examples, analogies.
Okay, so let's dive right in.
Yeah.
The first law that LeBron introduces is what he calls the law of motivation.
Okay.
Sounds simple enough, right? Know why you are doing a trade before you trade.
Right.
But LeBron argues that it's about going a little bit deeper than the surface.
Yeah.
He tells this story about David the dentist.
David the dentist.
Who loves trading options based on the tips that he hears on CNBC.
Yeah.
So the question LeBron asks is David truly motivated by profit potential?
Right.
Or is it more just the thrill of the gamble, that excitement fueled by the media hype?
Yeah, that's a crucial question.
Right.
Every trader needs to ask themselves this before entering any trade.
Yeah.
LeBron points out that some common bad motivations are things like seeking excitement, a desire for intellectual validation, or even just trying to prove yourself right. These emotional drivers can lead to some really impulsive decisions and ultimately losses.
So how would a trader actually put this law into action? I mean, it's easy to say know your motivations.
Right.
How do you actually do that?
Well, LeBron advocates for what he calls pre-commitment. So just like a trader would write down their rationale for a trade before they execute it, what they expect to happen, why they think it will happen, and their plan if it doesn't happen.
Yeah.
They should also pre-commit to their motivations.
Right.
Are they seeking long-term growth, short-term gains, income generation?
Right.
Having a clear understanding of that why behind the trade can really help them stay focused and make much more rational decisions when the market gets turbulent.
It's like setting up guardrails for your decision-making process.
Exact.
So you're less likely to get derailed by emotions or knee-jerk reactions.
Precisely.
That leads nicely into LeBron's second law,
the
law of adverse selection.
Oh, this is a fun one.
Now, this one sounds interesting. I'm all ears.
Imagine this. You're walking down the street, and a man offers to sell you a jar full of coins.
Okay.
He lets you examine it, shake it. You can even guess how much is inside. You bid what you think is a fair price, but here's the catch. No matter what you bid, you'll probably be unhappy with the outcome.
Why is that? Is it some kind of a trick jar?
No, not quite.
Okay.
The problem is the seller knows exactly how much is in that jar.
Right.
He has more information than you do. This is adverse selection.
Okay.
The person with more information has the advantage.
Okay.
In trading, this means that you're very rarely, if ever, going to be perfectly happy with the price you get for a trade.
Right.
There will always be someone out there with more information.
Right. So if we're always at an information disadvantage, then how can a trader ever really hope to make a profit?
So LeBron uses a really interesting analogy to explain this.
Okay.
He talks about a trader who specializes in, let's say, South African mining stocks. This trader clearly has an information advantage over someone who knows nothing about that market.
Right.
But LeBron points out that even within this specialization, there can be further asymmetry. So let's say this trader happens to know that one particular mining company is about to announce a huge new discovery.
So even among the specialists, there's always someone who has an edge, a little bit more information, a little bit more knowledge.
Exactly.
That gives them an advantage.
That's the key for traders. It's to constantly strive to gain that informational edge.
Right.
This could involve, deep diving into specific sectors, developing some proprietary research, building a network of contacts that can provide valuable insights.
So for a trader, the law of adverse selection is less about eliminating information asymmetry, because you can't do that.
Right, you can't.
And more about constantly trying to gain an edge, even if it's just like a sliver more information than the next guy?
Precisely.
Okay.
And this is why specialization is so crucial in trading. It's about becoming that expert. in a particular niche so you can better assess those risks and opportunities that others might miss.
I can already see how this applies to so many areas of life, not just trading.
Absolutely.
Like,
think about buying a used car.
Yeah, okay.
The seller knows the car's history, any accidents, repairs, issues, better than you do.
So how can we, as people in everyday life, use this law of adverse selection in our decision-making?
Well, the key takeaway is to be aware of the potential for these information imbalances.
Okay.
Just like a trader combats that adverse selection by specializing and seeking out more knowledge.
Right.
You can mitigate it in everyday life by doing your research, asking the right questions, understanding the market that you're operating in.
Right.
Whether it's negotiating a salary or buying a house, the more information you have, the better equipped you are to make a good decision.
It's that old saying, knowledge is power.
Exactly.
The more you know.
Yep.
The better you can navigate these complex situations.
Yes.
Speaking of navigating complexity, that leads us to Lebron's third law, the law of risk.
This is where Lebron dives into the nitty-gritty of trading.
All right.
He opens this chapter with the story of Ethel the investor. Ethel correctly predicts that a company, let's call it XYZ, will outperform the market. She buys the stock, but ends up losing money.
Wait, how is that possible? If she picked the right stock, shouldn't she have made money?
That's where the distinction between specific risks and general risks comes in.
Okay.
Ethel may have been right about XYZ as a company, but wrong about the overall market direction.
I see.
Perhaps there was a sudden economic downturn or a sector-wide slump that dragged down even the best-performing companies.
So even if you pick a winner, you can still lose if the whole game changes.
Exactly.
Yeah.
Lebron dives deeper into this concept by breaking down the risks involved in a specific trade.
Okay.
Short selling 10,000 shares of PTT Limited, which is Thailand's largest company.
Right.
Short selling involves borrowing shares, selling them at the current price.
Right.
Hoping to buy them back later at a lower price to return to the lender.
So you're essentially betting that the stock price will go down. But I'm guessing there's more to it than just hoping the price drops.
Oh, much more.
Okay.
Lebron unpacks all the layers of risk involved.
Okay.
And it's far more than just, the risk of PTT's individual stock price moving in the wrong direction.
So what are some of the other risks a trader would need to consider in a scenario like this?
Well, first, you've got market risk,
Right.
which encompasses not just PTT's individual performance, but also the performance of the Thai stock market as a whole.
Right.
The fluctuations of the Thai baht currency, global oil prices.
Right, because it's an oil company.
Exactly. And then even broader geopolitical events that could impact Thailand's economy.
So it's like a spider web of all these interconnected factors that can influence the trade.
It is. It is.
Wow, that's a lot to keep track of.
It is.
Okay.
And then you've got liquidity risk.
Yeah, okay.
Can you actually buy back those 10,000 shares?
Right.
When you want to? What if you borrowed them to short sell and the lender suddenly recalls them at an inopportune time?
So it's not just whether you're right. It's also about whether you can actually make the trade.
Exactly.
When you need to.
Then you have counterparty risk.
Okay.
What if the person you borrowed those shares from goes bankrupt and can't return them?
That'd be a nightmare scenario.
And we can't forget about operational risk.
Right.
What if, in the heat of the moment, you make a simple error in managing the trade?
Right.
Like entering the wrong number of shares, accidentally executing an order at the wrong price.
This seems like a lot for a single trade.
It is.
But I can see how this meticulous risk analysis
would
be absolutely crucial for any trader.
Absolutely. Lebron highlights that a trader needs to assess which risks are worth taking, where the potential reward justifies that potential downside, and which risks need to be hedged or mitigated.
Okay.
This could involve diversifying their portfolio.
Yeah.
Setting stop-loss orders to automatically exit trades at a certain price point, and constantly monitoring the market for changes that could impact their position.
So a trader puts the law of risk into action by being prudently paranoid, as Lebron puts it.
Yes.
It's not about avoiding risk entirely.
Yeah.
Because that means missing out on opportunities.
Yeah.
It's about understanding.
Yes.
Analyzing.
Yeah.
And meticulously managing the risks associated with every trade.
Precisely. And while this level of risk analysis might seem daunting, the core principles apply to any decision-making process, whether you're launching a business, investing your savings, or even just planning a big trip.
Right, thinking like a trader.
That's it.
Even if you're not trading stocks.
Exactly.
All right, well, let's take a quick break.
Okay.
And we'll come back and dive into some more of Lebron's laws and how they apply to everyday life after this. All right, welcome back to our deep dive into Agustin Lebron's The Laws of Trading.
Yes, we're back.
Before the break,
Yeah.
we were talking about the law of risk.
Right.
And all those layers of risk that traders need to consider.
Absolutely. It's more than just picking the right stock.
Right. It's about the whole game, the market, the economy, even global events.
It's like LeBron says, you got to be prudently paranoid.
I love that phrase, prudently paranoid.
Right. It's about understanding the risks, but not letting fear paralyze you.
Exact.
In fact, LeBron gives a great example of how a trader would approach this, using Ethel's case. Remember her?
Yeah, Ethel the investor. She picked the right stock, but lost money because the whole market tanked.
Right. She was right about the company, but wrong about the market direction.
So how could she have managed that risk better?
LeBron points out that if Ethel had been bullish on the entire consumer staples sector...
So that's the industry her company belonged to, right?
Exactly. She could have bought a sector-specific ETF like XLP.
Now, for our listeners who aren't familiar, an ETF, or exchange-traded fund, is basically a basket of stocks.
Right. It tracks a particular index or sector, so in this case, consumer staples.
So it's a way to diversify your investment across multiple companies within a specific industry.
Exactly. So by buying XLP, Ethel would have been exposed to the performance of that whole sector, not just that one company.
Okay, that makes sense, but what about the general market risk?
The risk that the whole market could go down.
Yeah.
She could hedge that by short-selling a broad market ETF like SPY, which tracks the S&P 500.
So it's like placing two strategic bets that kind of balance each other out.
Yeah, if the consumer staples sector outperforms the market, she wins on the XLP bet.
But if the whole market goes down, she wins on the SPY short-selling bet.
Precisely. And the amount of SPY she should short sell would depend on the historical correlation between XLP and SPY.
So how closely their prices tend to move together.
Exactly. LeBron suggests looking at their daily percentage returns over the past year to get a sense of this co-movement.
This really highlights LeBron's emphasis on using data and historical analysis.
Oh, absolutely. It's not just about intuition or gut feeling.
Right. It's about understanding the probabilities and the relationships between different assets.
Precisely. LeBron is all about using data to inform your trading decisions.
So this might be a little bit advanced for some of our listeners, but I think the point is that risk management is about more than just picking the right stocks.
It's about understanding the different types of risk and using tools and strategies to mitigate them.
And it's about using data to inform your decisions.
Absolutely. And LeBron dedicates a whole chapter to this concept of models.
Now, a model, just to clarify for our listeners, is basically a simplified representation of the real world.
Right. It helps traders analyze data, identify trends, and make more informed decisions.
So it's like a tool that helps you see the market more clearly.
Exactly.
Okay, so we've been talking a lot about trading.
We have.
But I want to bring it back to our everyday lives.
Sure.
How do these laws apply to the average person who's not, playing the stock market every day?
Well, LeBron constantly connects these trading principles to everyday situations.
Okay, I like that.
Like, for example, understanding adverse selection can help you make better decisions when you're buying a used car.
Okay, I'm intrigued. Tell me more about that.
Well, think about it. The seller knows that car's history better than you do, right?
Right.
They know if it's been in accidents, if it has any hidden mechanical issues.
Things you wouldn't know just by looking at it.
Exactly. It's like a classic case of adverse selection.
So how do we as buyers protect ourselves in that situation?
Just like a trader specializes to combat adverse selection in the markets,
Okay.
you can specialize in the type of car you're interested in.
Right.
Do your research, learn about common problems for that model, read reviews, get a vehicle history report.
It's about mitigating that information imbalance as much as possible.
Exactly. Don't let the seller's knowledge give them an unfair advantage.
And LeBron applies this same risk management approach to everyday financial decisions.
He does. He talks about insurance, whether it's car insurance, health insurance, even that extended warranty on a new gadget.
Oh, the dreaded extended warranty.
Right.
I always feel pressured to buy it, but I never know if it's really worth it.
LeBron encourages us to think like a trader in those situations.
Okay, how do we do that?
Don't just buy into the fear-mongering tactics that some salespeople might use.
Right.
Ask yourself, what are the actual chances that I'll need to use this warranty?
Yeah.
Is the cost justified by the potential risk I'm mitigating?
So we're applying that law of risk to personal finance.
Exactly.
Assessing the probabilities, considering the potential downsides, and deciding if the hedge, in this case the warranty, is worth the cost.
Precisely. And he gives some interesting examples of insurance products that are often overpriced.
Like what?
things like mobile phone insurance with a high deductible or overdraft protection on a checking account.
Okay.
He argues that in many cases, the cost of the insurance outweighs the potential benefit.
I've definitely been guilty of buying insurance I didn't need just because I felt pressured.
It happens to the best of us.
I need to start thinking more like a trader.
It's about being aware of those psychological factors at play. Salespeople often use fear and uncertainty to push us into buying things we don't need.
Yeah.
By understanding those tactics and thinking critically about the risks and probabilities, we can make more rational decisions.
So far we've covered 3 of Lebron's laws: motivation, adverse selection, and risk.
Those are some of the big ones.
And we've seen how they can apply to everyday life.
Absolutely. They're not just for Wall Street traders.
What other insights does Lebron offer in his book?
Well, one of the most fascinating concepts he explores is the idea of liquidity.
Okay, liquidity, remind me what that means again.
Liquidity refers to how easily you can buy or sell an asset without impacting its price.
Right.
A highly liquid asset, like, say, Apple stock or a U.S. Treasury bond, can be traded quickly with very little impact on the market price.
Okay.
But a less liquid asset, like a rare antique or a piece of real estate, might take a lot longer to sell, and you might have to accept a lower price to find a buyer.
So how does this concept of liquidity factor into Lebron's laws of trading?
Lebron argues that understanding liquidity is crucial for making smart trading decisions. He gives the example of a trader named Fred.
Right. Fred the trader.
Fred is looking at a regional bank, let's call it FITB, and he wants to capitalize on their upcoming earnings announcement.
Okay, so Fred's doing his research, thinking about potential risks, got his motivations in check.
He's following the laws.
He's doing everything right, so what's his next move?
Well, Fred believes FITB will beat earnings expectations, so the stock price will go up.
Okay.
Now he has to figure out how to play this prediction, taking into account liquidity and risks.
All right, so what are his options?
One option is buying FITB shares directly.
Straightforward, but what are the downsides?
Well, there's the bid-ask spread, the difference between the buying price and the selling price.
So that's basically the broker's cut.
Right, and if Fred's buying a lot of shares, his trade itself could push the price up, which is called market impact.
So he loses a bid going in.
Exactly, and then when he sells, he might push the price down, reducing his profit.
So he loses a bid coming out too.
It can get messy.
Okay, what other options does Fred have?
He could buy call options on FITB.
Okay, call options, remind me what those are again.
Call options give you the right, but not the obligation, to buy the stock at a certain price by a certain date.
Okay.
So if FITB's price goes up, the option's value increases, and Fred can sell it for a profit.
Right, but if the stock price drops, he could just let the option expire.
Right, and limit his losses.
So options offer more flexibility.
They do.
And potentially higher returns than just buying the stock.
Yes, but they have their own liquidity challenges.
Oh, okay.
Option contracts are generally less liquid than the underlying stock.
I see.
So Fred might have difficulty buying or selling the contracts he wants, especially in large quantities, leading to wider bid-ask spreads and more unpredictable market impact.
So there's always a trade-off.
There is.
Higher potential rewards come with higher risk and lower liquidity.
That's the game.
Lebron also mentions an even more complex option.
Oh, yeah.
A single stock future, or SSF.
Those are interesting.
It allows you to bet on the future price of a single stock. But I'm guessing they're even more risky and less liquid than options.
They are. They offer a lot of leverage, but they're definitely not for the faint of heart.
Right. Sounds like something for experienced traders only.
Probably a good idea.
But the key takeaway here is that liquidity matters, right?
Absolutely. It's not just about finding the right opportunity. It's about choosing the right instrument.
And understanding the associated risks.
Precisely. And Lebron cleverly connects this concept to something we can all relate to, buying a house.
Buying a house? I mean, you're not trading houses on the stock market.
Right, but he's talking about considering the liquidity implications of your decision.
Okay. How so?
Well, for example, if you know your job might require you to relocate in a few years.
Okay.
Buying a house in a slow real estate market might not be the best choice, even if it seems like a good deal.
Right. You might have trouble selling it quickly when the time comes.
Exactly. It's about thinking long-term and anticipating how easily you can convert that asset back into cash if you need to.
And this applies to other major life decisions too, right?
It does. Lebron talks about choosing a career path.
Oh, interesting.
He suggests that if you're highly specialized in a very niche field,
Yeah.
you might want to consider broadening your skills to increase your career liquidity.
So if your industry takes a downturn, you're better positioned to adapt and find new opportunities.
Precisely. It's like having multiple exits planned in case your primary route is blocked.
So we're back to this idea of adaptation.
Always adapting.
And I'm starting to see how all these laws are interconnected.
They are. They're all part of a bigger framework for decision making.
Understanding your motivations helps you avoid emotional decisions that could lead to unnecessary risks.
Right.
Being aware of adverse selection encourages you to specialize and seek out knowledge.
Yes.
And the law of risk forces you to think critically about liquidity and the potential consequences of your choices.
You've got it. Lebron masterfully weaves all these concepts together.
To create a framework for thinking about decisions in a complex world.
That's it, a world that's constantly changing.
This is giving me so much to think about.
It's a lot to digest.
Lebron's book is like a guidebook for navigating not just the financial markets, but life itself.
It really is.
One of the stories he uses to illustrate these concepts is the story of John Merriweather and long-term capital management, or LTCM.
Oh, LTCM, that's a classic.
That name rings a bell. Wasn't that the hedge fund that famously collapsed in the late 1990s?
It was, and almost took the global financial system down with it.
Yikes. So a cautionary tale about the dangers of overconfidence and leverage.
Yes, and failing to properly manage risk, even when you have some of the brightest minds in the world on your side.
Okay, I'm ready for a deep dive into the LTCM saga. Give me the rundown.
All right, so John Merriweather was this legendary bond trader at Salomon Brothers.
Okay, Salomon Brothers, that's a Wall Street powerhouse.
It was.
So he was a high roller, a risk taker, believed he could beat the market.
You could say that. And in the early 90s, he left Salomon to start his own hedge fund,
LTCM,
and he recruited a dream team.
Like who?
Economists, mathematicians, even a couple of Nobel Prize winners.
Wow, so the best of the best.
They built these intricate models and developed trading strategies that seemed practically foolproof.
So what went wrong? It sounds like they had it all.
Well, their downfall, in part, was their reliance on leverage.
They borrowed a lot of money.
A lot. They were convinced that their models were so accurate.
So they could amplify their profits without much risk.
Exactly. But more leverage also means a bigger potential for a disaster.
And that's what happened.
It did. In 1998, Russia defaulted on its debt.
Oh, wow. That must have sent shockwaves through the markets.
It did. It triggered a global financial crisis that no one had anticipated.
So their models couldn't predict that?
They couldn't. Their models relied on historical data and assumed a certain stability in the markets.
So the unexpected happened, a black swan event.
Exactly. And to make matters worse, other firms had started imitating LTCM's trades.
So when LTCM started to crumble, everyone else did too.
The panic spread like wildfire. The whole financial system was kittering on the brink.
So what happened?
The Federal Reserve had to step in and orchestrate a bailout by a group of major banks to prevent a complete meltdown.
It's a reminder that even the smartest people with the most sophisticated tools can get blindsided.
It is. It underscores the importance of humility, of knowing that we don't know everything.
And of always being prepared for the unexpected.
Absolutely. Lebron uses this story to drive home several key points.
Like what?
The dangers of overconfidence, the importance of understanding the limitations of models,
Right.
and the need to be constantly adapting to a world that's always in flux.
So even with all the data, all the analysis, all the meticulous planning, there's still a need for that human element.
There is.
That ability to adapt and think on your feet when the unexpected happens.
Absolutely. The truly successful traders are those who can balance their analytical skills with a healthy dose of flexibility.
This makes me think about the rise of technology and trading, you know.
Right. Algorithms, AI, high-frequency trading.
It seems like machines are taking over Wall Street.
It does seem that way sometimes.
So is the human trader becoming obsolete?
Well, Lebron doesn't believe so.
Okay.
He sees technology as a tool, not a replacement.
I like that perspective.
He argues that while technology can automate routine tasks and provide insights, it's the human trader who brings those uniquely human qualities to the table.
So what are those uniquely human qualities that give us an edge in this world of algorithms and trading bots?
Well, Lebron highlights several key skills that will be crucial for traders in the future.
Right, let's hear it.
First, he emphasizes critical thinking.
So it's not just about crunching numbers and following the signals from your algorithm.
It's about being able to interpret that data, see the bigger picture, and make judgments that go beyond what the machine can tell you.
Right, you need to be able to identify biases in the data, recognize patterns that the algorithm might miss.
And make decisions based on a nuanced understanding of the market.
Okay, where else?
Creativity.
Creativity. How does that play into trading?
As markets become more efficient and algorithms more sophisticated, the ability to come up with new ideas, spot emerging trends before they become mainstream, to think outside the box, that's what will set human traders apart.
It's about being innovative, adaptable, and able to see the world differently than a machine does.
Exactly. And then, of course, there are the human skills that are always in demand.
Like what?
Communication, collaboration.
Yeah, those are crucial in any field.
Especially in trading, where you need to build relationships, communicate effectively, work as part of a team to make quick decisions.
So Lebron sees the future of trading as this blend of technical skills.
Data analysis, coding, understanding algorithms.
With those essential human skills.
Critical thinking, creativity, communication, collaboration.
It's about finding that sweet spot where human intuition and experience meet the power of technology.
Exactly. It's not man versus machine.
It's man with machine.
Using technology to augment our abilities, not to replace them.
That's a reassuring thought. I was starting to worry we'd all be replaced by robots.
I think there's always going to be a role for human ingenuity.
Okay, good.
Creativity, adaptability.
This has been an incredible deep dive into Lebron's laws of trading.
It's been a journey.
We've gone from understanding our motivations to managing risk, to embracing liquidity, to adapting to the ever-evolving world of technology.
And it all comes back to Lebron's overarching theme.
Constant adaptation.
Adapt or die.
But I'm still a little fuzzy on what that looks like in practice.
Yeah.
How does a trader actually adapt in a constantly shifting market? What does that look like day to day?
That's a great question, and it's something Lebron addresses head-on in his book.
Okay, good.
He uses this fascinating analogy to illustrate the concept.
Okay.
He talks about the evolution of the human eye.
The human eye. How does that connect to trading?
Well, Lebron points out that the human eye, this incredibly complex and sophisticated organ, it didn't just appear overnight. It evolved over millions of years through a process of gradual adaptation.
So through natural selection.
Right. Those random mutations that happened to improve vision gave their owners a survival advantage.
And those traits were passed down to future generations.
Exactly. And Lebron argues that trading strategies evolve in a similar way.
Interesting. So what works today might not work tomorrow.
Exactly. Markets change, competitors adapt, new information emerges.
So traders need to be like those early organisms, constantly experimenting, evolving, adapting to their environment.
To survive.
Right, to survive.
He emphasizes that this process of adaptation is never ending.
So just when you think you've found a winning strategy,
the market shifts and you need to adjust.
So it's like a never-ending game of chess.
It is, constantly anticipating your opponent's next move.
And adjusting your strategy. So how can a trader actually cultivate this mindset of adaptation?
Well, Lebron offers some practical advice.
I could give you the playbook.
First and foremost, he emphasizes building a robust process.
So it's not just about having a brilliant idea for a trade.
Right. It's about having a framework for testing, evaluating, refining that idea so it can be applied consistently.
So like a scientific method for trading.
Exactly. A robust process involves defining your goals, identifying your edge, developing a model, backtesting your strategy using historical data, meticulously managing risk, and constantly monitoring and refining your approach based on new information.
So taking a systematic and disciplined approach rather than relying on gut feeling.
Precisely. And a key part of this process is embracing failure.
Failure. Now, that's not a word most traders want to hear.
I know, but Lebron argues that failure is an essential part of learning.
So how do we embrace failure?
By viewing failures not as setbacks, but as learning opportunities. Each failed trade, each incorrect prediction, it can reveal a weakness in your strategy or a blind spot in your thinking.
So you analyze those failures, identify patterns, refine your approach.
Exactly. Lebron encourages traders to approach failure with curiosity, not shame.
Okay.
Ask yourself, why did this happen? What assumptions did I make that turned out to be wrong?
And how can I adjust my thinking to avoid making that mistake again?
It's about turning those lemons into lemonade.
I like that.
And extracting valuable insights from your missteps.
Like Thomas Edison famously said.
About the light bulb.
I haven't failed. I've just found 10,000 ways that won't work.
That's the spirit.
So it's that mindset of perseverance, continuous learning.
It is. It separates the successful from the rest.
Lebron takes this concept a step further.
He does.
By emphasizing building a culture of experimentation.
That's right.
So creating an environment where it's safe to try new things, take calculated risks, and learn from both your successes and failures.
Exactly. He argues that trading firms should encourage their traders to experiment with new strategies, test new ideas, push the boundaries.
And not be afraid to fail along the way.
It's all part of the process.
This reminds me of the concept of psychological safety that we hear about in high-performing teams.
It's about creating a workplace where people feel comfortable sharing their ideas, taking risks, learning from their mistakes without fear of judgment.
And LeBron believes this culture of experimentation is essential for innovation and adaptation in any field.
It's not just about trading, it's about a mindset.
A growth mindset, that belief that we can continuously learn and improve through effort and experience.
That's it, seeing challenges not as obstacles, but as opportunities to evolve.
This is incredibly inspiring. LeBron's book seems to offer a blueprint for becoming more adaptable and resilient.
I agree. It's about embracing the journey, the challenges, the opportunities that come along the way.
It's about realizing that we're all works in progress, and that this pursuit of knowledge and self-improvement is a lifelong endeavor.
Well said.
So we've talked about adapting to change, constantly evolving like the human eye.
Right.
Powerful concept. But I'm wondering how that translates to concrete actions.
Yeah.
How does a trader actually put this law of adaptation into practice?
Right.
Especially in a world where the markets change so fast.
Well, LeBron argues that adaptation isn't about reacting to every little market fluctuation.
Okay.
It's about having that solid foundation. Allows you to adjust when things change.
Right.
He emphasizes building a robust process.
Right. That scientific method for trading.
Exactly.
Defining your goals, identifying your edge, back testing your strategy.
Look at that.
Having that system in place. So you're not just making decisions based on emotion.
Based on fear or greed.
Exactly. It's like having that roadmap that guides you through the
ups and downs
of the market.
But even with the best roadmap, you're going to encounter detours
Right.
and unexpected obstacles.
That's where embracing failure comes in.
Exactly.
I'm starting to understand why LeBron sees failure as so important. It's not about celebrating mistakes.
Right.
It's about viewing them as learning opportunities.
Yeah.
Each failed trade, each incorrect prediction.
It can reveal a weakness in your strategy.
Right.
Or a blind spot in your thinking.
So you analyze your failures, identify patterns, refine your approach.
That's the process.
LeBron encourages traders to approach failure with curiosity rather than shame.
Ask yourself, why did this happen?
Right.
What assumptions did I make that turned out to be wrong?
Right.
How can I adjust my thinking to avoid making the same mistake again?
It's about turning those lemons into lemonade.
Exactly.
Extracting valuable insights from your missteps.
That's it.
Like Thomas Edison said.
About the light bulb.
I haven't failed. I've just found 10,000 ways that won't work.
Yeah.
And to really do that, you need to have that environment that supports experimentation, right?
Absolutely. LeBron advocates for building a culture of experimentation, both within trading firms and within your own approach to the markets.
So creating an environment where it's safe to try new things, to test new strategies, to challenge conventional wisdom.
And to learn from those mistakes.
Right. It's about encouraging that growth mindset.
Exactly.
Where failure is seen as a necessary part of learning.
A stepping stone.
Right.
To success.
LeBron believes that this kind of culture is essential for fostering innovation.
And staying ahead of the curve.
And this applies to any field, not just trading.
Absolutely.
So how can we as non-traders cultivate this culture of experimentation in our own lives?
It starts with being willing to step outside of your comfort zone. Trying new things, even if there's a chance of failure. Being open to new ideas, even if they challenge your existing beliefs. And surrounding yourself with people who support your growth and encourage you to take risks.
It's about embracing that lifelong journey of learning and evolution. Right.
It is.
Constantly seeking new knowledge.
New experiences.
His skills.
Precisely. LeBron reminds us that adaptation is not a destination. It's a continuous process.
Right.
And by embracing this process, we can become more successful.
Not just in the markets.
In all aspects of life.
But also just more resilient, more adaptable, and more fulfilled individuals.
Absolutely.
This has been an incredible journey through LeBron's laws of trading.
It really has.
It's amazing how these seemingly complex financial principles can be applied to so many different parts of our lives.
LeBron does a great job of making it relatable.
He does.
And applicable.
So to wrap things up, LeBron's book is really a testament to the power of thinking like a trader. Not just in the markets,
right,
but in all our decisions.
all our endeavors.
It's about understanding risk.
Embracing uncertainty.
And constantly adapting to this ever-changing world around us.
That's the key.
Well, on that note, we'll wrap up this deep dive.
It's been a pleasure.
Thank you so much for joining us on this exploration of Lebron's laws of trading and ultimately the laws that govern life itself.